Hi guys, welcome back to the channel. I hope you're doing great. If you're new here, please subscribe to support the channel and see more videos like this one where we trade the markets by making clear and simple analysis. We call it the minimalist way because it's a clear and simple analysis by using clear and simple indicators. Today I'm looking at the Australian dollar US dollar on the 1 hour time frame, and I'm using just two indicators. The advanced signal bars, which if you are interested you find the link to test it yourself, it's down below in the description, and just a regular moving average. The only change that I made to the moving average is that I set the duration to be 54. So you go into the settings and you just set the length of the moving average to be 54, so that it's a very smooth moving average. Otherwise, if you choose a shorter length, it's gonna be more like this. I want to see the macro trend here, and the macro trend here is to the upside. Of course, it's a macro trend. However, recently it looks like we might get the beginning of a downtrend because the price went down multiple times. It went lower below the moving average multiple times, and now it looks like this pace is increasing, so it's now more and more to the downside. And I clearly see one setup that we can place here. So let me just comment on the advanced signal bars. Typically the advanced signal bars is traded like this. So you see a signal like this one down here, it's a green signal, so it's a buy signal. You can buy and decide where to get out. Same applies here. You see a sell signal to the opposite side, and so you can sell. Same applies here, same applies here, and then you got more buy signals that you can all trade according to what they tell you. However, today I want to show you a different setup with the advanced signal bars, which is to trade it a little bit differently, because we are exploiting these horizontal lines that the signal makes. So what we want as a condition is if the price is below the moving average, and in this case it is below the moving average, then when a candle breaks to the downside an horizontal line, in this case it's going to be a green horizontal line, then we can sell. So right now we can sell, and I'm about to sell. In the opposite setup will be like this one. So the price is above the moving average and it breaks to the upside, the candle breaks to the upside, a red horizontal line, then we can buy. So at this point we could buy. So back to our setup, we can sell. How the setup looks like? Well, the setup looks like this. I always trade it like this, or at least many times I trade it like this. I just sell as soon as I see a breakdown of the horizontal line, and then I fix my stop loss. Typically, if it's a long candle, I just put the stop loss just above that candle. If instead are short candles like this one, all these ones, then I maybe try to stay a bit higher, and so that maybe I'm higher than the previous candle, or even the one before the previous candle, if they are very close to each other. And then what I aim for in this case is a 1x return. So it's going to be just a 1x return. I know it sounds a bit risky, at least to me, because for the most part with all the other indicators that I use, I always take a minimum of 2 as a risk reward, but with this kind of setups, the most that makes sense to me is a 1, and I'm gonna explain why. because with this kind of setup, what happens is that if we are right, and so we are at the beginning of a downtrend, then we will probably have by following the price, we will probably have 1, 2, 3, 4, I don't know how many similar setups. And so if we trade all these setups with a 1-to-1 during the downtrend, we accumulate all those returns. So it's gonna be a 1, then a 2, then a 3, then a 4. This kind of setups must be seen as a set of trades. So it's not just one trade, but it's gonna be multiple trades that add up to each other. Okay, so this is the trade I'm looking for, and hopefully it's the beginning of a downtrend when we see the price that moves below the moving average, which is this smooth. It's a very good indication that the uptrend should be over, and especially in this case where we see that the pace of the price being below the moving average is increasing, should be a very good indication that we are at the beginning of a downtrend. So this is the trade, and I'll keep you posted. It was actually very fast because within a few candles we already got to our target, so we won this trade. So it's okay. I'm expecting to see more trades like this one, especially considering the fact that the price is now moving lower, so the downtrend should be confirmed. And if we are right that we are at the beginning of a downtrend, we will likely see many trades like this one. So we will take each one of them blindly with a 1-to-1 risk reward, and we will add all them up together, and at the end we will see what we get. And here we got another one. So let me just set the trade here. We are correct in the fact that this is a downtrend because the price is just falling. So I'll set since this is a relatively long candle, I will set the stop loss to be just above this one, and moreover the previous candle were actually lower than the highest point here, so this is going to be my stop loss. And let's see, the target is going to be right here. Okay, I want to have a 1. Okay, so guys, let's take this trade and see how it goes. Also, this second trade is over, and we got to our target here. See what happened here. We got a third opportunity within this trade that we were already into. Okay. What I typically do is that I just skip the opportunity because I'm already risking, and to me a 1-to-1 risk reward is a very high risk, because I mean, if I win this one and I lose the next one, I'm at 0, which is okay, but I was involved in 2 trades and in the end I'm still at 0, so it's a bit risky to me, a 1-to-1 reward. So since I'm already risking some money, I typically skip the trade and don't take the opportunity. Because in the end, if we are correct, as it looks like that we are in a downtrend, if we are correct during the downtrend, we have plenty of opportunities. Typically these are of course the assumption is that you should use this technique on trending assets and on trending time frames, because if you believe that this technique can work on like sideways markets, it's very tough. It's gonna be very tough, because you should always exploit the indicators when they perform at their best. And in this case, with this configuration, with this kind of setup, you should always use it in trending markets and in trending time frames. So, well, if you want to be a bit more conservative, you can wait for example, in this case, it looks like we are at the beginning of the downtrend. Maybe what happens next, of course I don't know, but let's see in the past what happened. As you can see, maybe here it was trending up quite significantly, then it slowed down and then restarted. So you could exploit the situation here and then the restart to understand that it was basically an uptrend and it was just consolidating here, but then it is restarting. So you could trade after the restart, so you have enough confirmation from the previous price action that you were correct in your analysis. Okay, so this is a more conservative approach. It's definitely safer. You miss the first opportunities, but you end up getting all the rest. Of course the trend must continue, but as long as the trend continues, you're gonna have plenty of these opportunities, because as the price goes down in this case, these opportunities continue to form, so we can exploit all of them, and with a 1-to-1 risk-reward ratio, typically we are safe enough. We are safe enough because when the price breaks down, typically it continues to go down. From my experience, what could happen is that the last trade could be the one with the highest probability of being a losing trade, because it's where the market then reverses. So it looks like it's a good opportunity, you just trade it blindly and then the market reverses. Of course, it could also happen losing trade within the downtrend, because as we said before, within a downtrend we might have some retracements towards our direction, the main direction, and so in that case you might end up with a losing trade or maybe a couple. But the overall idea is that the return is gonna be computed at the end of the downtrend. So even if we get maybe 1 or 2 losing trades, it's probably going to be a minor percentage of the whole total trades that we took. So guys, let's see what happens next. It looks like the downtrend can continue, and I will just keep you updated. And here we have another one. So see how frequent these are during a downtrend. So the entry price is this one. The stop loss is going to be somewhat here, because I want to be I mean, I see this this candle is quite long, so yeah, I guess this could work. I need to fix the target to match the stop loss, so that it is perfectly a 1. So yeah, it's going. I cannot do that, but in my trading account I always look for a 1-to-1, exactly 1-to-1. Okay, so this trade is set as well, so let's see how it plays out. And we already won this one as well. I'm not kidding, we won this one as well. I mean, the big assumption here is that you need to get into a trending asset and into a trending time frame. As long as you can get those requirements, then trades like this are very frequent, and they typically last very few candles. So as you can see, this was very short, and this was short as well, because it was just here, and this is short as well. So I mean, it's like this. It's always like this. So when you get involved into a trending asset and time frame, then you should expect this kind of behavior from the price action and from the setup that we are exploiting. So from the signals of the advancing yield bars, and of course we always use the moving average, a very smooth moving average, as a macro reference point. Looks like we have another one, yet another one. This situation was kind of weird because it looked like it was broken down, but it was not, barely. So I prefer to wait a few more candles, and then we have a candle which is significantly lower, so I'm trading this one. So the trade now looks like this. I will try to stay a bit high here since we had this kind of weird movement, and the target is going, of course, to be a 1-to-1. Okay, so the trade looks like this, and I'll keep you updated on this one as well. So far we have 1, 2, 3, and this is the 4th opportunity. Okay, so let's see what happens next. This time we were a little bit unlucky, guys, because we've been stopped out. You see here the price just touched our stop loss level and then retraced, and then it's now down. So it's okay. I mean, we cannot always set the stop loss exactly right, so we can just guess when we are safe enough. Maybe it, I mean, right now we are stopped, so we are out of the trade with a losing trade. That's okay, but maybe this is the turning point, which means that the trend went down and down and down and down, and now it's starting to slow down, and now it will go back up. This is something we cannot predict in this situation. What I can tell you is that we might have another opportunity here, because we have another horizontal line, green line down here. So if the price comes back down, then I will trade. Let me shrink in this one. If the price comes back down, I will definitely trade it, because the most important thing is to be consistent throughout the downtrend. If instead the price will go above the moving average, then we are done with this downtrend. It looks like the downtrend is not over yet, so we have another opportunity here, so I'll just trade it straight away. The trade will look like this as usual. So the stop loss is going to be a bit higher than the previous candle, of course, but also I'd say that the previous, since these are very short, the candle before, and the target, of course, is going to be a 1-to-1. So okay, perfect, we can get a 1, and let's just see how this trade plays out, and let's just hope not to be that unlucky as we were in the last opportunity. I mean, this is something you cannot predict, because sometimes you're just unlucky, but in the end we are now sitting on 3 winning trades and 1 losing trade. So we are still positive during this whole rundown. Let's see just how this one plays out. So this time we got to the target and we just closed another winning trade. The price initially went up, so it almost got again to our stop loss, but then retraces. Again, this is something we cannot predict, but as you can see in the previous opportunities, this one went straight down and then almost straight down, and a little bit sideways and then straight down. So we cannot predict how the price moves. We can only set our stop loss and target where we believe we are confident enough and we are safe enough. To me, this is a very safe approach, and as you can see, it's playing out, because right now we are on 1, 2, 3, 4 winning trades and just 1 losing trade. So in the end we have 3 winning trades, and we are not over yet, so we just need to wait and see if we can get more opportunities down the way. So I've waited some more candles, and it looks like now that the downtrend is over and we are actually seeing the potential beginning of a new uptrend. So we might get some buy opportunities around here in the future. The point is that our trade is over, our overall trade is over. This must be seen as a one single trade in the end, and the total return is that we got 1, 2, 3 and 4 winning trades and just one losing trade, just because we were unlucky, very unlucky. It is to be said that in the last one we were very lucky because we touched the target and then the price moved higher. So I'd say that these two balance out each other, so it's okay in the end because we had a very profitable downtrend here. And in the end, we didn't had a losing trade for the last trade. I mean, as you can see here, during approaching the bottom of this downtrend, we got a new horizontal line, as you can see down here, but then the price never broke down, so it went just up. So it did not give us an opportunity to sell again, and so he prevented us from taking a potential loss, a potential losing trade, because typically, except for this one which we were unlucky, but typically if you get a losing trade is either the last one, which is the most frequent case, or maybe during the downtrend just takes some time to move sideways or retraces a little bit. So maybe like this one, you take a losing trade because it doesn't get to your target and then retraces a bit more and then it restarts to the downside. Those two are the typical scenario, but I'd say that the last one is usually the one that you might lose most frequently. But in this case, for example, we didn't get the last one, in the sense that this new horizontal line was never broken to the downside, so we were very preserved in this sense. Okay guys, so I think that's it for today and this whole trade which lasted about 2 weeks. Guys, if you have any question, feel free to ask down below. If you enjoyed the video, be sure to like it and subscribe as well if you didn't already. And guys, I'll see you in the next video, of course.